So we look at a lot of things when doing analysis on markets, including seasonality. And I was actually listening to the Zombie song, "Time of the Season." It's one of those oldies but goodies that if you heard it, you would remember it. Anyway, there's some interesting things that we kind of uncovered in looking at seasonality, and I'm going to share those with you during this episode. So stick with me. My name is Brian Cannon. Welcome to Markets in 5. All right, before jumping into seasonality, I want to share with you a couple of charts. One is the S&P 500 and the other is the Nasdaq. You're going to see that they look very similar, and there's a reason for that. I'll let you know here in a minute. But in just looking at it, I think the market's burned off some of this overbought. That I talked about during the last Markets in 5. So the market was overbought, it's come back down a little bit, but you can see it's definitely, the momentum is heading up. Everything looks pretty good still. I mean, you've got kind of some upper resistance that it came off of and couldn't get through. But it did hold its 20-day moving average, and everything's still continuing to head up. So it's got some room to go before it tops out, or even, quite frankly, hits the next major level of resistance. So I think, from a seasonality standpoint, I'll just kind of revert you back to this chart. But essentially, I think there's a little bit more room left in the S&P and as well as the Nasdaq. But you can see that even though we had a negative crossover on the MACD, it's still positive, and the momentum is still heading up. So, I feel like any sort of pullback at this point is probably a buying opportunity as long as it can kind of hold that 20-day moving average. So if we look at the Nasdaq, you'll see that those two charts, the Nasdaq and the S&P, look very similar. So they both were kind of working off an overbought situation, and the Nasdaq came down and held the 20 and bounced off of it. Now it does have a kind of a double top situation going on here, so it'll be interesting to see if it can break through that, or if that's going to provide a major level of resistance. So it also had a negative crossover on the MACD, but again, the momentum is still positive, and MACD is still positive. So again, everything looks good, but interesting little side fact here. So if you look at the two charts, they look very similar. So why is that? Well, I'll tell you. Both the Nasdaq and the S&P are both cap-weighted index, meaning the largest companies comprise the largest percentage of the index, right? So the Nasdaq and the S&P 500, their top 7 holdings are identical. And so literally the same. So that's why they kind of move in tangent. And the top 7 holdings on the S&P 500 comprise nearly 25% of the entire index, right? And so if you look at those same top 7 holdings in the Nasdaq, they comprise, get this, drum roll, over almost 55% of the index is the top 7 holdings. So it's very concentrated. So that's why the two indexes look the same. And when those top 7 positions run, then naturally you're going to see the Nasdaq outperform the S&P 500. And that's the secret of how that works. All right, so when I talk about seasonality, I talk about the historical performance of the index on a monthly basis over a period of time. So if we look at the S&P 500 over the last 20 years, for instance, 74% of the time it's been positive, with an average return of 2.2%. So and it happens to be historically the strongest month of the year for the market. But if you dive into the chart a little bit more, then you can see that the follow-up months, August and September, are two of the weakest months of the index. And so kind of back to the title of this episode, time of the season, the time of the season might be coming to an end for a little bit. So, we're going to be paying a lot of attention to, trying to capture some extra alpha here in July, but being very cognizant of August and September. So if we look at the NASDAQ, of course, it's going to be very similar because we now know the secret. They both hold a lot of the same holdings, percentage-wise. And so over 20 years, July happens to be the Nasdaq's greatest month as well. So it's been positive 84% of the time with a 3.3% average return. So again, August and September tend to be weaker months for the Nasdaq as well. So again, we want to pay attention to this and use this information to help us make good decisions. All right, before we wrap up, I'll give one recent trade on the Canon IQ strategy. So we picked up Veritiv. It's kind of hard to see, but there was a buy signal right here. So around $14 or so, basically 2 months ago, the end of April. And so that position's up 65% inside of 2 months. So now we've taken some profits as we kind of broken through, but we have left some of the trade on. And it's broken out of this kind of double top here, and so it still has room to run. So if I had to put all of that into 2 words, it would be not yet. So I think there's a little bit of gas left in the car, and so we're going to continue to hunt and peck and find opportunities. But if the market decides to give back some of its gains, we're going to work hard to protect that. But if you have any questions, give me a shout, and I'll look forward to seeing you on the next Markets in 5.